Hey, what's up, my friend? Welcome back to this week's market analysis. Alright, I'm just so happy, right? So, since this is the first week of February, right? What I usually like to do at the start of the month is to, share with you, right, the broad overview of what's going on in the financial market. So, I'm going to, talk about I'm going to talk about the forex markets, right, the bond markets, the stock markets, metals, and much more. So this is to equip you, right, to understand, right, what is going on right now in the financial markets, right, the levels I'm looking at, and the opportunities that, is currently available right now. So all this and more in today's video. I'll see you there. Okay, so before we begin, right, I just want to share with you all a testimonial I saw on YouTube, right, a comment actually, right, by Sia Bongar, which I think was quite crazy if you ask me, right. It says, Rainer, I don't know how to thank you, mate. I don't know how your videos ended up in my recommendations last year, but ever since the first video of yours that I watched, I've made so much money than before. I've only been trading for 18 months, but I've already paid off my mom's house here in SA. I'm not sure where SA is. So yeah, I thought this was one of the, really heartwarming feedback that I've gotten, right? I hope, this was, the money that is made is using proper risk management and nothing that is, from borrowings or, over leveraging, right? But nonetheless, right, I'm really happy to hear that the videos are helping y'all, right? And it really made my day, right? So thank you, Sia Bongar, and, to the rest of you who have been, leaving feedback and testimonials. So anyway, back to this week's video, right? As I've said, right, since it's the first week of February, right, I wanted to say March, right, since it's the first week of February, I typically like to have an overview of what is going on in the financial market. So we'll look at the forex markets and, the other sectors as well. So the first one we'll look at is the euro dollar, okay? So euro dollar is this chart that you can see right now. This is the daily time frame. So on this over here, right, my bias is still towards the short side, because if you use the 200 MA, right, this is a very simple trend filter that I've shared many times, right? You can see that it is still pointing lower, right? So on this time frame, the euro dollar daily time frame, my bias is to go short on this market. And if you ask me, right, this would be a level that you want to pay attention to for a short setup. All right, you can see that we have a previous support, turn resistance, and it also has a confluence of this 200 MA coming in, right? So this is a level that you want to pay attention to if you're, looking to short the euro dollar. The pound dollar, right? So we talked about this last week, right? I mentioned this, right? Again, my bias on the pound dollar is towards the downside. You can just use the 200 MA. It's such a simple filter, and it would put you on the right side of the market more often than not. So one thing to share is that the 200 MA, right, the one that you see, this black line, it's a longer term trend. It helps you define the longer term trend, not the shorter term trend. So you can see that in the short term, right, pound dollar, I don't deny we have this, higher highs, higher lows over here, the short term, right? But in the long term, it is still towards the downside. So the long term trend is where I want to be trading with, right? Because this type of trend tends to last longer than the other type of trend, than the shorter term trend. So this is why I like to, trade along with the 200 MA. So anyway, right, the pound dollar, right, it came into this level of resistance, right, this area, right, and Thursday, Friday, we had this, lower closes, right? So I shared with you last week that I actually went short. So to recap your memory, right, this was the setup that I took. You can see price, right, push lower. Then we have this weak pullback, right? Notice the small bodied candles by the buyers, right, compared to this strong bearish selling pressure, right? So in this instance, right, I read the price action as the bulls are, losing strength. I place a sell stop order below this low, okay, and I got triggered in this trade. So you can see that this isn't exactly the easiest trade to hold, because I had to withstand the pullback against me, right? When I went short somewhere here, the market went in my favor, pulled back against me, and then now seems to be no trading lower. We'll see how this goes, right? But my stops is, I believe, somewhere over here, as I've shared last week. So we'll see how this goes, right? Whether the trade can, retest back this low, break the low, and continue the downtrend, right? That is something that we'll have to see. Aussie dollar, right? In this instance, right, again, I've already put a 200 MA for you, right? Looking to long, okay? So I'm not looking to short at this, as you can see, price is approaching this area of resistance, right? To be honest, right, swing traders, they can look to short, because after all, price is at this area of resistance, and it looks pretty significant at this 77.5 level. Okay, there's a 0 dot here. So, but for me, I prefer to just, keep it simple, follow the rules, right? So since 200 MA is pointing higher, I would typically prefer it to pull back towards this level of support and then look for a long setup, right? So Aussie dollar, I'm bullish. New Zealand dollar, right? You can see that it's pretty much at this point in time in the range between these highs and this lows over here. Okay, so I just want to answer a question, right? Often I get questioned by traders. So for example, you see this over here at this point in time, right? You have a breakout. And often I get, hey, Rainer, how do I tell if this is a real breakout? And the honest truth is that, you never know. You just don't know. In fact, I took the shot on this trade. I shorted the break of support, right? I had a stop loss of, I believe it was somewhere over here. My stop loss was somewhere here, right? I shorted the break of support on this inside bar. My stop loss, I think, was somewhere here, and I got stopped out, right? The thing is, I myself, I don't even know whether this breakout is, going to work out. In fact, it looks quite good, right? You have a, somewhat like a head and shoulders pattern. The range has been pretty long, and I thought, perhaps you can get a big move, right? A big move towards the downside. But as you can see, I got stopped out of this trade, and the point I want to highlight out is that, you really do not know whether, the breakout is real or not. So this is why we always have proper risk management. This is why, we always have stop loss. Okay? So nonetheless, right, this is the New Zealand dollar. You can see again, right, approaching towards the highs over here, similar to the Aussie dollar because they are both commodity currency. So sometimes you can see that their correlation are pretty close, right? So this will be a level to look for on the New Zealand dollar. Okay? Dollar Canadian. Alright, so this market again is also in the range. You can see between these lows and this high is this double top, if you want to call it. And if you ask me, right, I would be hesitant to go long at this area of support, right? Two reasons why. Number one is because this level has been tested many times. The 130 level, this one over here, tested once, twice, 3, 4. Okay, so, and the thing is, the more times support get tested, right, the higher chance it tends to break. Plus, another thing that if you notice is that we have higher lows coming into support. So this is a sign of weakness by the bulls, right? As it's telling you that they are unable to push price higher. So this is why you always get, why you get higher lows. So if you ask me, right, I'm not looking to go long on this dollar Canadian, right? Neither am I looking to stay short because I don't have a trading trigger or a setup for it, right? But if you look at this, right, I would say be careful of, going long at this point in time. All right, I know, right, price is at support, but you need to learn how to read the price section of the markets, right? So you can actually, sort of tell, what are the types of support area you want to trade or those that you want to avoid. So if you ask me, right, this is a support area that I would avoid trading because, it looks weak to me at this point in time. Okay, so that's for dollar Canadian. Dollar yen, let's have a look at this. Again, this one over here, right, you can see lower highs coming into this area of support, right? Again, if you ask me, I wouldn't look to long this area of support over here. No doubt, I agree that the trend is, towards the upside, right? But I would still avoid trading this area of support because it has been tested quite a number of times and you have lower highs coming into this area of support. Okay, so this is for dollar yen. So we have covered the 6 major currencies. Now let's look at, let's see, how about the metals, right? Gold and silver. So for gold, you can see that over here, gold, if you look at the big picture, the weekly is, we have this break of support, right? Then price traded lower and then pump, close all the way back up higher. So if you look at the daily, right, if you look at the 200 MA, at this point in time, the 200 MA is pretty flat. Okay, so your bias, my bias should be, I pretty much have no bias, right? It is still flat and slightly pointing towards the downside. But at this point in time, gold, right, as I've said, right, I don't really have a bias on this. I don't have a setup on this. And this is a perfect example of me staying on the sidelines for gold, right? Silver, similar, right? You can see, if you pull out the 200 MA, pretty much flat, right? In fact, you can see that it formed this inverse head and shoulders pattern, right? This is the neckline. It broke above it, right? And you want to see whether you can retest this level and continue the next move higher. So gold and silver, pretty much, I would say, very similar patterns that is forming out, right? Looking bullish at this point in time for both gold and silver. Okay, how about some stock markets, right? The S&P 500, I think this chart simply says it all, right? Bullish on the S&P. You can see a series of higher lows, higher lows, higher lows, right? These are some of the levels that I've actually drawn out. You can actually mark out if you want. I think I spot another one over here. So how do you interpret this level? Very simple, right? The red one over here is a weekly support resistance. The black one over here is a daily support resistance, right? So you can just copy paste my levels if you want. There is no charge to it. It's free, so just copy paste and you can compare with your own charts if you wish to, right? If you ask me S&P, right, a pullback towards this level over here, right, would be a good opportunity to long, right? So this is a level I'll be looking for on the S&P. How about the DAX, right? DAX, again, same thing, right? It's looking bullish. Pullback towards this level, right? This will be a level that you could look for because you can see that it's an area of support, right? A deeper pullback will be towards this one over here, right? This previous resistance, turn support, okay? And how about somewhere closer to Asia, the Nikkei? So you can see that this area of support, right, has been sliced, diced many times, right? So again, right, I wouldn't really be too keen to long, once it gets tested too many times, price is just chopping through it, right? I would tend to avoid the trade. If it comes towards this level, or maybe even towards this level, right, then okay, that could be possibly a level that I may be interested to do business, right? So this is for the Nikkei. And lastly, let's talk about the bond markets, right? So as you've known, right, the bond markets interest rate has risen, right? So you can see that this actually being reflected in the bond markets. How about let's talk about the 10-year Treasury then. On the weekly time frame, right, basically you can see that this has been the range for a long period of time, right? During periods of low interest rates. So it has been in a range for very long, and finally, right, we had this breakdown over here followed by a higher close, which price has closed back above into the range. Okay, but if you ask me, right, the market still isn't looking too bullish at this point in time, because this is the weekly chart, mind you, right? Weekly chart, because you can see what happened is that the market rallied back in, retest the previous support, becomes what? Resistance, right? And now it's trying to trade lower and consolidate over here. So if you ask me, right, I am actually bearish on the bond markets, right? So if I can, right, if there is a setup, I'll be looking to short the bond markets, right? You may be thinking, oh, but Rainer, this is in an area of support, a level of support. Why are you looking to short, right? The reason is again quite simple, right? Because again, the longer a market tends to consolidate at a level, the longer it tends to range over here, right? The weaker the support level becomes. Because if you think about this, right, there will be traders who are looking to go long, and where would they put their stop loss? Below this low, right? Because support is an area to go long, you put your stops below the low. So what happens if there is enough trader going long and there's a cluster of stops below this low? Well, if price were to trigger below the low, that stop orders would fuel into selling pressure, and then that's when you have a price decline. Okay, so this is why I prefer to stay short on this 10-year Treasury, right? In fact, if you go to the daily time frame, you pull out your 200 MA, it's pointing lower as well. So that's again a simple filter to use. Okay, so you go down to the daily, right? If you pull out the 200 MA, it's going to be pointing lower, right? It's quite obvious based on the looks of this chart. And if you ask me where is the level that you want to trade from, I would say this is a level to be looking for shorting opportunities. All right, the 30-year Treasury, again, very similar, right? You can see, right, a retracement back towards this level would be a shorting opportunity. Right, so yeah, that's all I have for you all in this week's market analysis, right? Perhaps we can do a recap, right? So we talk firstly we talk about the major currencies. Okay, major currencies, the majors. This was the FX market. I mentioned that the euro dollar, the pound dollar, and the dollar Canadian, right? If my memory serves me right, I have a bearish bias on them, right? Dollar yen, they're still in an uptrend, even though we saw that we have lower highs coming into support, right? What else? Aussie dollar, New Zealand dollar, right? Pretty much at this point in time, right, they're more towards flat or bullish, right? This three currency pairs. So that's for the major. Second thing we talk about is the metals, gold and silver, metals. Right, my bias for them is also pretty much flat. You can see that both gold and silver have quite close correlation, and silver forming an inverse head and shoulders. Right, so for me, right, I'm pretty much flat on the sideline on the metals. The third thing we have is the stock markets, the indices. Right, so I'm actually bullish on the stock market. So I can see that the uptrend is just very strong, very obvious. A pullback towards a level of support, right, will be opportunities to go long. And the fourth thing we covered is the bond. Right, basically bond bearish. Right, you have a increase in interest rate, and you can see that if you look at the bond charts, most of them on the daily are pretty much in a downtrend. So a retracement back towards, for example, this level over here would be an opportunity to short the bond markets. Okay, so I hope this gives you an overview of what to expect for the month of February, right? If you have enjoyed this video, please hit the subscribe button below. And if you have any questions, any feedback, let me know in the comment section below. With that, I wish you all good luck and good trading. I'll talk to you soon.